Property Investing Insights, your authority on all things property investing, finance and wealth creation with Right Property Group.
G'day, hey guys, Phil Tarrant, co-host Property Investing Insights with the Right Property Group, the talent in the studio. It's not me, it's Reshmi and Victor Kumar as we enter our 10th year.
I know.
Is it 10th year
It
of recording this?
Yeah, the first podcast was back in, 2016?
That's a bit sad.
I know. I know.
You look the same.
You look worse for wear, mate. Is it the new year, or is it just the look you've got going for this year?
What, like shabby chic? Is that what it is?
Distinguished.
Distinguished.
Mm-hmm.
No, I reckon I'm in better nick today than what I would have been 10 years ago. I would have.
I know.
Yeah.
I know. A decade by, so you really planned it.
Yeah. Well, mate, I'm sure I planned my decade. I always do. That's what everyone thinks about when.
A decade sounds like a very long time, right?
It does. And you get quite depressed about it all when you think about how fast a decade can move through. And I reckon, a decade on, what's my property portfolio look like? Probably better than it did a decade ago.
Mm-hmm.
It probably could be a lot bigger than one of these, and probably have more debt and more headaches. But
do you need it to be bigger?
And this is the question. You sort of. Because I work in and around property all the time, and I speak to probably the best property investors in Australia, or those people who are supporting the best property investments in Australia. I'm not really a compare and contrast type of people, but it's sometimes quite hard to avoid the idea of going, maybe I could be doing more. Maybe they're doing better than me. Maybe it's really hard. You must see it as well.
That is the question all the time.
Yeah.
No matter what industry, I guess.
Yeah, I try and. Keep to myself, and most people would say I march the beat of my own drum, so I never really worry too much about what other people are doing. But still, it's still difficult to not get pulled into the thing and going, oh God, that person seems sort of further ahead than me. But what are they compromising by doing that, or what else are they? Because I do a lot of other stuff that isn't properly related. So
that's right, and that's important to recognize, right? That with the advent of social media and the advent of instant news, it's very easy to see other people and think that they're doing really well and get caught up with what they're doing, what numbers they're doing, what numbers they're flaunting, as opposed to bring it back to your own person and say, okay, these are my financials and these are my goals and these are my values, and keeping it real. So, and that's true not just in property, in everything in life these days.
You really need to look at what goes on in the background. You can see all good numbers and everything really looking great up at front, but what is really happening behind the scenes? Yeah. So you have to really hone down on that and realize, is it really something I want, or I should be content with what I've got and stop comparing yourself with somebody else?
It's really hard, and I know a lot of people struggle with it, and I don't. I'm quite comfortable with what I'm doing, but you've got to be careful of the veneer of information you get, which may shape your decision making. Is sort of comparative analysis of, property. The property investment these days is being framed as this mechanism for wealth creation, but that wealth creation being in some ways visually not properly related. It's sort of lifestyle related.
Yes.
And that's the sort of the positioning or the posture of it now on social media, and that's right or wrong. I'm not going to give an opinion on it, but you've got to be careful that doesn't sway your vision or view of wealth creation through property investment, as in that is the end result or product of it.
Yeah, exactly.
And that's tough to do. Got to run your own race. But nothing happens in isolation, Victor and Reshmi. You need a plan with this stuff.
That's it.
Remember about 5 years ago, Victor, we did a series of podcasts with our good friend Steve Waters on Design Your Decade.
Yes.
And here we are halfway through that decade. So I thought, what a great opportunity for maybe the new generation of property investors coming through. And there's always a whole bunch of people who are seeing property investment, because there's a lot more accessible now through social media. It could be sort of quite overwhelming, all the different moving parts to it. But for me, property investment is relatively simple. It's about finding and buying the right property and holding on to it for a period of time. So I really want to revisit this idea of design your decade and number one, for those people who are on a pathway for property, it's a really good opportunity to reconnect with what you're doing and how you're tracking against your plans and your vision as property investors. But for those people who may be kicking out, it's a construct, it's a structure for actually designing what the period ahead looks like for you. So happy to launch this mini-series, Design Your Decade. So we're going to spend the next sort of 6 months. This is a bit of an intro, but the next 6 months pulling all that apart, and I'll be leaning on you guys as the voice and the vision of sensibility and sanity, and probably me as a rambling madman trying to work it all out. But it sounds nice, Design Your Decade. It's very emotive.
It is.
It's a very emotive concept, isn't it, Reshmi?
It is. There's a lot that has gone into to design your decade. It's not only about the wealth. It is your whole life. And look at 10 years, the decade, it's a long time, but it goes really fast. And if you don't have control on how you're going to design it in terms of the wealth creation side of things, then you get sucked up into the investing and chasing the money and all that sort of stuff, rather than living the life that you need to be living whilst in that designing phase of that decade with your wealth creation. So, yeah, for us, we came to this realization, let's say about 15 years ago, when we had been investing. Overall, yes, we had all these strategies that we could implement and all the rest of it. And the good thing with us, we didn't have any children. And for me, this is you funny.
The good thing for us, we didn't have any children. to the Kumar kids at home, you're well loved.
I was very naive, right? I was like 22 and starting investing, and I wanted to be a millionaire by the time my children came. So giving myself 10 years' time, I'll be a millionaire, and then I'll have my family and I'll live at home happily raising my children in this beautiful world. I kind of got there somehow.
You
but
could have
that's
married
not
a
all.
bit better personally. That's what I would say.
Married into money instead of a pop-up.
So mine was a naive thinking, right? And at that time when I started, that's how my thoughts were. But as you get along and start doing all the investing, and life happens, and you gain maturity, you realize, well, this is not quite of the right way of doing things. Everything has to be in balance. And so that is the Design Your Decade, because we've experienced the decade and more, 2 decades, almost 3. So it is like a really streamlined approach as to how you design the decade, how you live your life with wealth creation through that decade. And it's not only a decade. Investing, you won't get the results within the decade. You will get a good foundation, a good growth. A lot of things will happen if you plan it well.
Yeah, and sort of pulling apart this idea of Design Your Decade. So the last bit of it is decade. So it's time bound, and that being the T of a SMART goal, so it's time bound goal. But the idea of design I quite like, because design implies creativity.
Yep,
absolutely.
And creativity is something which is very individual, and it's flexible and it's forgiving, and you can change things, and if you think of creativity, whether it's creating music or creating painting, it's a thing that evolves over time. So that's why I like the term design.
Yeah.
Implies crafting. It implies uniqueness, and that's key. Whereas a lot of goal setting or planning inside a property can be quite technical, and I typically find when things are too technical and rigid,
it gets lost.
It gets lost and it's not fun.
Yep.
So design also implies some curiosity, and a bit of entertainment, right?
Yeah.
So that's an important designing.
Yes.
Yeah, absolutely. So if you look at it, right, so what we did over our break, and if you listen to the last podcast, you would deduce that we do our goal settings.
We spoke at length about that. How did that go, by the way? Let's check in. Yeah, you happy?
I'm very happy with our goal setting.
Yeah.
And in fact, the kids got a bit less involved this year. A bit more
because they
distractions.
didn't want to, or
Well, the younger one was all about going into Japan as part of the school trip, and the older one was all about, hey, I've got
Getting
uni,
into
so,
uni.
Yeah, so this is my last hurrah. I want to go out and visit my friends and so forth. She's just got a license as well. So
did she finish year 12?
she is first year 12.
Yeah.
Okay.
So,
Is university on the cards? Yeah.
So starting tomorrow,
Really?
as we record here today. So when we sat down, we did our goals. One of the things that really highlighted to us is that, okay, there's going to be in the next pretty much 5 to 10 years, there will be a substantial change in the way we do things in life generally. And by taking action now, and we've talked about this topic at different milestones. At 2020, we introduced the Design Your Decade concept, and then now we're in 2025, 5 years down the track. A lot has changed in that, and the biggest change we have, which if we are not careful in terms of property investing, is the impact AI has got in our lives. So a couple of things in there. The first is that when you talk about AI, the way we get employment, the way we earn money, and the types of jobs we have is going to change substantially over the next couple of years. As AI takes a greater hold in how things are done in terms of whether we need as many employees in businesses. Of course, if you're talking retail, if you're talking trades and all that, I don't think that'll go away. But we're talking your more procedural work, so legal, accounting, all of those things, so, all white-collar jobs, they're at risk. And they're at risk in terms of, okay, the business itself is going to outsource a lot to AI and will need a human element in there to oversee. So it reduces roles, and therefore it will reduce salaries or reduce the hours that you're able to work. Now, when you look at that, if you're not planning your next few years, you're going to be left out. You won't be able to invest as structurally and as heavily as you are able to right now. Then the other thing that's changing as we record this is that the Reserve Bank may reduce interest rates. It will reduce at some point in time within the next 12 months. I dare say sooner rather than later, according to all the pundits. Now, my pay grade is not that high, so I can't make those predictions. But there is an interest rate change happening, which would mean there is a sentiment change in the general populace, which will then create a frenzy of short-term growth, which we want to capture, but it will also, in its short-term growth, capture a lot of what I'd call mug investors. So these are people that are doing knee-jerk reactions, investing, and therefore they get caught in the ebb and flow of the smaller, minuscule movements of pricing, interest rates, sentiment, which area to buy. And if we scale it back to, okay, let's plan this out. And we started doing this with the goal setting podcast that we did as the last podcast.
I must say we have to thank all those people who actually downloaded the
I was going to ask how that went.
Yeah, that went
So
really
that was
well.
your template, your blueprint.
Yes.
Yeah, okay. Can you still get access?
Yes, you still can till this podcast comes out.
Okay.
Then we will be doing the Design Your Decade series and taking people through that. So what we want people to do is go through the process with us with this podcast so that we kind of are guiding you throughout the year as to what you need to do. So it's really good for the people who are thinking about investing or getting started. It's like let's call it like a little mentoring sort of session where you're going through this whole process throughout the year. And so we're doing it with this. We've done the goal setting. The next step is let's design your decade. Let's think about those.
And if you still want that goal setting template, just send us an email, questions at rightpropertygroup.com.au, and we'll send it to you.
So you would say you probably want to do that now before we start really going through the next 6 parts of this special series.
Absolutely.
Yeah, okay.
It's important to have those goals. And we'll talk about goals also as we go along. One of the things that people get wrong, a couple of things that people get wrong in terms of property investing is one, like the mistake we made is we compromise lifestyle for the sake of investing.
Mm.
Right? So lifestyle in the forefront, investing in the background. That's one of the keys.
I think with us, it wasn't that. I think we both were not good communicators in terms of what exactly that meant. Because for me, I don't know about that one, but for me,
you guys actually need documents to try and work this out with, like planning time.
For me, it was okay to not to delay the children as much as like I was actually scared to have children. So about 10 years into our marriages, that's when and so I was happy that I was young and I was going to make all this, millions of dollars. Yeah. So that was my focus. And it wasn't a lifestyle thing at the time. And I guess when children come in your life gets more enriched and there's a lot more that life gets more creative, like life gets beautiful. And so that's where the lifestyle becomes more important. Mm-hmm. And so to say that our lifestyle was not quite there, I was quite happy with it because that was the lifestyle I wanted. And there would be that mismatch of not knowing exactly what he wanted and I wanted. So, and having that...
Victor's easy to keep happy, right? You just need
give me some kava.
Carver and a remote control.
So if we look at on that vein, right? Yeah. So people translate that into investing as well, right? So there's a mismatch there in terms of one person's just taking the reins and then running with it without checking in with the other person. And if you're in a partnership, if you're a husband-wife team or a partnership of any sort, whether it is related or unrelated, you really need to sit down and map out your goal as to what you're achieving so that you're then also pulling in the same direction. As opposed to, if I can use a boat analogy, dragging your anchor, and you're really not going anywhere. So that's an inside joke where I couldn't anchor properly over the weekend, and we kept drifting until we got it right. So,
okay.
So if we look at it from that viewpoint, and then also, as I was talking before in terms of AI, one of the other things that we really need to look at it in terms of the concept of designing the decade. And the decade could be rolling, right? Because things change. Economy changes, markets change, your circumstances change, relationships change. So it could be a reset somewhere. You could be buying a principal place of residence that's taking you out of the market for a couple of years. So it's a rolling decade, but if you do it in tranches of 10 years, but then you drill it back to 1 year. And one of the things that most people do is they overestimate what they can do in a year, but they substantially underestimate what they can do in a structured 10-year plan. So when you have this new AI coming in and data sets and the way data is presented and some of the AI with the hallucinations that the AI itself has because of the information being fed in, it becomes harder and harder to discern what is right and what is wrong and what is pertinent to you and what is not. So all of those things will fall into the background if you've got a formulated plan, a formulated approach, knowing where you're heading and knowing what to look out for, what are the pitfalls, and having the check-ins pretty much every year to have the check-ins to say, am I on track? Do I need to slow down or do I need to speed up? Or do I need to change strategy? Because there's nothing wrong with changing strategy, right? The concepts need to be the same. The goals can be relatively the same. But strategies would, and these are things that we'll talk about in the later podcast, is that strategies can change and has to change as employment changes, as age comes in. Like with your Phil, we need to be now starting to think of where the motorized scooters and so forth, right? So those things and extra costs come in, right? Yeah. So and the types of properties you buy and which areas you buy will change. So you're not then caught up in the flavor of the month to say, hey, look, I've made a lot of money in Perth, I've made a lot of money in Brisbane, I made a lot of money or I'm going to make a lot of money in Victoria. You're then really investing within your means, in your affordability, in your lifespan, taking into account money, taking into account age, taking into account other things that are happening in your life.
So largely it's about being proactive rather than reactive.
Yes.
Yeah, I think the authenticity of the fundamentals will become more relevant because if you're depending on the AI side of things, the data and all that knowing the ground truth will be even more crucial.
Yeah.
Yeah. At the moment, we are like in a transition phase, let's say. There's some people who are really looking at ground truth and some people are just basing their investing on data. But when AI kicks in, the data will not quite be as reliable.
The issue you have with AI, and I think AI, it's the utility of AI which is really going to be the key factor. But everyone's obsessed or absorbed with AI. AI is really just really smart computers who are able to pull information out of the ether and package it up in a way to give you some information, right? You know, but it can really exacerbate or cultivate or precipitate, choose your word, misinformation. And that's the key thing.
Yeah.
You know, it's only as good as the information that it's using.
Yeah.
So back to your point around the efficacy of the information that you have, it's very difficult to build out a decade thinking that AI is going to tell you which way to go every step of the way, right? It's very, very dangerous, very dangerous. So this is the intersection between information and which is, you know, originated through digital or AI-related means and the realities of what's going on, interpretation and insights of that. And that's the difference. And I think that's where buyer's agents will play a very important role. Like there's going to be so much information that you're going to have information paralysis, right? You're not going to know what to do. And everywhere you step, there's going to be reasons why or why not you can prove or disprove something. So I think the role of the professional moving forward is only going to become more critical.
That's right. Yeah. And we were talking earlier on off camera that, you know, there's always been property spruikers in the property industry. Yeah. What they look and feel like has changed in the sense that it'll be easier for the spruikers to come out and create credibility using their digital profile, creating groups and so forth, right? So this is where you really need to drill back and say, okay, can I relate with that? Or is it really not something that I want to go down the path? And don't get stuck in the, you know, I've got $10 million portfolio, I've got a $50 million portfolio. Those numbers don't relate to you. And there are people that are really good out there with good digital content and kudos to them. I think we really need to drill back to say, okay, look at the backstory of everything, especially with people creating, and this is more prevalent at the moment in the US, where they're creating digital avatars where you know, they've got software to speak in their own language, in their own profile, so it's as if they are talking, and they've actually got visual images of that as well.
Although, you know, we've tried it all out. It's there. It's accessible now, right? But everything comes down to trust, right?
Yes.
Trusted information, number one, and then trusted advice is the key thing. So there's information overload as you design your decade. Information overload. You really need to have a bearing on trust, and trust is going to be connected with those people you choose to work with to make the right decisions in terms of designing your decade, but then tactically working out the deployment of that. And if you're consuming all of your information and making your property investment decision making from social media, that's okay. One recommendation I would do is that you've got to be considerate of where the advice comes from that you're consuming, and you may need to pay for it, you know, because that's probably the advice that's going to be most attuned. Paid advice largely is connected with regulatory parameters around what people should be providing in terms of advice. And it's not as conflicted. And this is the challenge as you design your decade.
One thing I wanted to say is a buyer's agency as a profession hasn't been around for that long.
No.
Let's take an example of accountants, right? That everyone knows. Accountants have existed for a very long time. There are some good ones out there and there are not some good ones out there. So when buyer's agency is a profession which is very young in our country here, the trust factor that you talked about, how do you trust someone? Everybody who is a buyer's agent, again, the profession being so young, does not necessarily have that many years of experience and also personal and with clients. So that's where the difference is, I guess, when the profession itself is just new and so many people out there. So you've got to be very careful as to who you choose.
Absolutely. And everyone's got to start somewhere.
Yep.
And in many ways, I've been very I've been an advocate of the growth of the buyer's agent sector in Australia.
Yeah.
You don't have to use a buyer's agent. And most Australian investors don't use a buyer's agent. That's cool. You can do all this stuff yourself. I choose to use a buyer's agent for a whole bunch of reasons. I've been speaking about it for 10 years, right? And that's cool. What I would say, though, is that people need to start somewhere. So you need to appreciate, if you are using a buyer's agent, that you may be paying for someone else to learn their industry and their profession at your expense. That's okay. You just need to be conscious about that. And that might be because you like their story, you like what they've done themselves. Like, not everyone can be an experienced buyer's agent, and we need to ensure we have generational development of buyer's agents moving forward. I think it's critical for the sector.
Making sure they're not learning off your expense.
But this is the issue with buyer's agency, to talk about that for a moment. It's, you've got to do your apprenticeship somewhere. I think, working in an established buyer's agency firm for years to actually learn the craft is going to allow you to gain experience and capabilities. But there are buyer's agents coming out who might have bought one or two properties themselves or have no properties themselves. And now they're providing as a service for other people. That's okay. I'm not making a view on that whatsoever. But back to the point, if you're looking to drive forward and design your decade and craft that, and you're using professionals, you need to make sure you're using the right professionals.
Yeah, that's right. And just in terms of using an analogy, right, with buyer's agents, if you're going to a doctor, if you're going to a hospital, you initially, you could be lumped with the intern, the registrar, or the consultant.
Yeah. It
depends on what your needs are, and it depends on where you are in terms of the journey. I would say that as this profession grows, there will be regulation coming in, which I'm really
Pippa's been shouting for it. I sat on the board for Pippa for years, and I've probably been on the board for 8 or 9 years now. And back when I was on the board of Pippa, it was like trying to encourage the government to regulate property investment advice, and it was still so far away from it. And I think the issue is insurance or something like that.
It is. Yeah. And so if you look at it financial planning point of view, they've brought in new regulation, all that. So a lot of the older financial planners have just
but that's a mess now as well, financial advice. We've got a huge shortage of financial advisors in Australia. I went to a thing the other week, and there is at least now some sensible discussions around dialing back the red tape, right? And there's a consciousness of going, you can over-regulate something and stifle it, which is what's happened in financial advice. And I would say, buyer's agency as a profession, you would like to think it's considered in the same way as professional financial advice, right? You're advising on asset classes largely and tactics and strategies around it. So don't overcook the regulation too much, but at least give us barriers and some consumer protections around it.
That's right.
And requirements for operators. Like, financial advisors, a lot of them had to go and get even more qualifications over and above their undergraduate and postgraduate degrees to try and regulate. I don't know. I know Pippa, you guys are members of Pippa, they've got a, what do you call it? There's like a qualification, QPIA, Qualified Property Investment Advisor. Right, look at that. It looks as a pretty good basis for this moving forward. I don't know.
Absolutely. So if you look at it from the construct of Design a Decade, right, and to bring this all together, we really want to be talking in terms of, as you're setting out, the first thing we need to address is mindset and consumption of information. Yeah. So you need to make a conscious effort to move from a consumer of information to an implementer of the information.
Yeah.
Then you need to obviously get your team around you. So this is depending on where you are in life and what entities you are investing in. Obviously, your accountant, your mortgage broker, a investment savvy mortgage broker.
Yeah.
And then also your, as you said, financial planner is they do play a really important role, especially in the middle and later half of the portfolio. And then, of course, your property strategist, which is where we come in terms of...
That's the important point. You call yourselves property strategists rather than buyers. So part of what you do is buyer's agency. But
Yeah.
property strategist is a rung up above.
Correct. Yeah.
Yeah.
So we're looking at it not from let's buy a property.
Mm.
We're looking at it from let's buy something that'll get you to your goal, right? And for each person, depending where they're in life and what amount they have to invest and how they want to invest, whether they want to be hands-on or hands-off, determines then the strategy, which is where we put that in place first, and then the buying bit is right in the end. Yeah. So there's a whole lot that needs to happen in between before you've actually started buying. And then as you start buying, there's a whole lot that needs to happen in terms of defending what you've got and also amplifying what you've got without unnecessarily getting into too many transactions.
Yeah.
The old adage of, if you look at a lot of the pieces of the yesteryears, there's this concept of, buy many and, sell down a few. Nothing wrong with that. That era, I think, has changed because now the purchase prices are much higher. Now, of course, we look at this 10 years down the track, we'll say that was better back then.
But relatively speaking, the purchase prices are higher than what they were a decade ago.
Correct.
Yeah.
I mean, if you look at when
Based
you
on
bought,
salary.
right?
Yeah.
When you bought,
Yeah.
we're buying in St. Mary's, mid 200s. Yeah.
Why don't they buy about 100 properties, Victor? You held me back, man.
Well, you're not finance ready, right? One of the constructs of investing is you've got to be finance ready all the time.
Finance ready.
Maybe mindset ready.
But hindsight's always 2020.
It is,
right? So, which is we always.
Which
look
is
back
why
and
we have the Design Your Decade, because we've gone through those decades of investing and all. So we know what works, what doesn't work. Imagine the number of properties we've bought, the number of properties we've sold, the different strategies we've used, and with the life we have lived over the time. Isn't it beautiful that we've got this system going and we can just apply this sort of a template which we can vary according to the person's lifestyle, according to the person's goal. We can change the variables and make it work so that within that 10, 15 years, they've got some decent level of success to show for themselves, right?
And this comes back to this idea of designing. And when you're designing something, typically you never really finish. That makes sense.
You don't. There's always tweaks you make.
There's
Right?
always tweaks,
One of the things I want to flag really early in the piece is that 10 years you might not actually get to your income goal 100% there, but you may be able to buy back 1 day or 2 days of your time through the success of your investing. Or it could be that there's many approaches. So what are you investing for? Are you investing to replace your income? Are you investing for a milestone? So in other words, you're buying a couple of properties strategically to then perhaps leverage off or offload to buy a principal place of residence. Are you a rent investor forever? Or are you really looking at, cash flow is not an issue because you've got a business, you've got good income. So right now cash flow is not an issue. That's not your main goal. Your main goal is to create as much equity as possible. So then the portfolio looks different. The flavor of that portfolio is very different. The cash flow of that portfolio is very different as well.
And again, I'm happy you brought that up because there are three, but there's more versions of that, but three quite sort of simple ways that most people will be able to fit into it. And going back to the information that most people are consuming right now, most, I'm generalizing, but most of it is probably more orientated towards that first one. Like this concept of property investment now is replacing your income. That seems to be the flavour of the month at the moment. You don't really get a lot at the third version you said there, and this is people who probably have a fair bit of dough. They're not too worried about cash flow. They're looking for equity creation. That flies under the radar. That's not really that happens at real professional levels. I think accountants and advisors, that's there. But this whole idea of income replacement, I think, is again back to the point of like 10 years ago, 15 years ago, whatever it was. You're buying affordable properties were much more affordable. Inversely to purchase price versus income generation, right? But that number back then of like, when I started investing, which would have been 12 years ago, I think or so, the number then was $100,000, right? Oh, yeah, I want to build a property portfolio to have $100,000 of passive income, right?
Yeah.
That's still the number.
It's still the number.
That gets bandied around
yeah.
it. And you sit there and I'll put it out there. Good luck trying to build that today, you know, with the yields that you're getting and the cost of debt and all that sort of stuff.
Yeah.
But it's still the number. Like it's like the property investment industry needs something to hold on to, and they go, oh yeah, we're going to retire everyone on $100,000 a year.
Yeah.
We started it off ourselves, I think, and that's what's filtered
we're
through
the
the whole.
Yeah, it's you guys are responsible. But you know what I mean? Like, but it's like we're talking about designing a decade.
Yeah.
Like a lot of people thinking, well, I've got to frame my design my decade because that's the goal that everyone strives towards. Like. Yeah, just be careful.
Each person's goal will be very different, and you've got a good decade to, make that happen. Yeah.
So if I just flesh it out a bit more in terms of 100K, that could be an aiming point. But as the portfolio grows, as you go through the process, that goal and the clarity of that goal becomes really important, right? So you need to come back and check in every single time. But the reality of it is that it could be that in 3 years' time, you want to have X dollars of equity, accessible equity, to perhaps pay for uni fees for your kid, right? Or pay for the private school. Because to create that as a consistent cash flow is substantially harder in today's market. So you need to focus more on, I want to extract that equity, whether it is by selling down or whether it is by supporting the equity extraction via loan. And that then caters for the lifestyle. Because what are we investing for? We are investing for comfort in life, right? The wealth creation, the gift to my kids and all that, they're just brag rights at the end of the day. We really, when you drill it right down, when you sit everyone down, put a gun to their head and say, why are you investing? It's for comfort in life.
I don't want to worry about stuff.
Yeah, that's it.
That's what it is,
you wouldn't be saying with a gun on your head. Comfort
No,
in
I'm just
life.
saying take my most negative property.
Take my property with it. There you go.
Yeah.
But that's the reality of it, right? We're investing for comfort in life.
Yeah. When you're designing your decade, like this is your overall plan, that's what you want to do, right? But then things will change. Year one, you do something, and then as you mature, your lifestyles, things are happening in your life, you'll change, and you might say, okay, this is what I thought I wanted to do, but now let's relook at it because that's not what I really want to do. I want to do this also. And to your point, like 100,000, remember the first time, I was very happy, like we were able to get 30,000, wasn't it? $37,000 in income. So
from
the portfolio, and then I stopped working.
There you go.
Because back then, that's what I was earning, right? 37,000.
That was our goal.
And so when I stopped working, that's when the family and all the rest of it started.
Happened.
And then,
and that was something you designed, right? And that's good. And then the numbers change.
Numbers change.
The philosophy sort of is consistent, but the numbers change. So, and again, it just comes back to the point it's such an individual thing, designing your decade. So yes, you need to orientate yourself with what other people are doing because it can help potentially guide discussions you might have internally or externally with people to craft what that decade looks like. But, it's tough to get it right, and you've got to be kind on yourself because, whatever you design as your decade, it's probably not going to play out like that.
No. It'll change. It'll change. There's so many variables in it. Lending, life, political climate, AI. All of these things will play a role in changing it.
Interest rates and crises like GFC and COVID and all the rest of it thrown into it. So,
Yeah, it's funny. I actually watched on the weekend. I don't know if you've seen it. Do yourself a favour, guys. You'd probably enjoy it. You're familiar with South Park. There's a South Park movie called, I think, The Pandaverse or something or other. And it pretty much exactly what we're talking about, which is AI and the way people work. So everyone with white-collar jobs are out of a job.
Yeah. That's the basis of this podcast, guys. I got it from South Park.
There you go. So South Park. But there's if you haven't watched it, listeners, watch it because you'll sit there. It's a parody, obviously. But you sit and go, okay.
Well, actually, there's there's a lot of thought that goes into these movies.
Very clever.
If I can,
very clever.
Even if you look at The Simpsons and all that, right? So that had a lot of thought go behind it in terms of what's happening in real life, and they bring it in because it's relatable to the people that are watching it.
But designing your decade, I think it's absolutely critical. If you want to be a property investor, one common theme I would say for all property investors is that they have jobs, right? And typically you need a job in order for a bank to give you money, you know, and there are some outliers to that with people who are just from very wealthy backgrounds and don't need to worry about this stuff, right? They're already comfortable. But most of us, normal folk, need to work. So when you're designing your decade, the way and sort of, if you look inside my brain, it probably looks like a flow chart, right? You're going to have different things working in parallel with each other. And these are probably the makeup of your life. So there's going to be, job will be one of them, relationships will be another one, you know, health and wellness will be another one, your property portfolio. So I see them as different channels, right? And they're all interconnected in many ways. But the common thing is your ability to manufacture money will be a critical factor in your ability to design a decade of wealth creation through property investment. This is your point around AI, saying just don't assume that your job today is going to be, you know, going to give you a traditional pathway of consistent growth over the decades, because that's typically what happens.
It may stagnate.
It may stagnate. You know, and I think there's going to be a harsh reality for a lot of Australian workers. Like everyone's on this pathway of always more. I want more growth. I want more responsibility. I want more money. Like this is the reality of most workers. There's a point where you get to the top, you know, and that top for a lot of people isn't, you know, it's a pyramid for a good reason, right? So you need to actually understand and design your decade around your ability to manufacture money. And there's going to be a point in time when your ability to manufacture money is going to cap out.
Or the lending may change, because as you get more advanced in your years, the banks may start saying, okay, there's so much change happening in terms of the employment landscape that we want to dial your loans back down to, say, let's say if you're starting age 55, we're going to dial your loan back to 20 years as opposed to 30 years. And that then has a direct correlation to the type of property you can buy, serviceability, because it impacts lifestyle, because your holding costs increase because your loan is now only 20 years.
This is a real dichotomy, isn't it, with property investing, in that, you know, in your 50s, inverted commas, is typically your
That's when you get the aha moments.
Highest earning years, right? It's where you're probably making the most money.
Yes.
But banks start seeing you differently, going, well, you probably only got 15 years or maybe 20 years of work, because they're probably going to make people in their 50s now work till they're 70 before they get retirement. The idea is that you're trying to bring forward your retirement through property investment. But,
no, they understand you've gotten smarter about how to make money, so they want to take a little bit more of it.
so they'll make sure they still provide funding during that period, but, you know, it might be on different terms and conditions. So, you know, all needs to be, it does get complicated. But this is, again, all these different aspects of, see, if I was designing my decade, I would actually do it visually. I would say work, life, family, wellness, health. I'd put them all out. I'd probably plot and map it in a Gantt chart of some ways. That's probably how I would do it, because I'm a weirdo. But that's what you need to do.
If you look at it, right? So if you look at yourself, right, and say, okay, what have I achieved in the last 10 years? You know, life, all of these, you know, channels that you've mentioned, right? And you bring that on a mind map and say, okay, that's what I've achieved. If I took a more structured approach, how much more can I achieve? At the same time, ultimately, the magic number for every investor is 1,840, I think, is 60, one of the two.
And what's that number?
Number of seconds in a day.
Okay.
Yeah, we've got all the same.
Time bound.
Yeah. I think it's 1,000. No, it's 18,000, something. Yeah. I butchered that number. But anyway, look it up.
It's not only how much I can achieve, it is how much more I can achieve to a point of satisfaction and content in my life.
This is your point. How much is enough?
What is enough?
How much is enough?
In fact, when I do reviews with our clients, one of the things I say to them, and sometimes they walk away very surprised, you got to stop buying. Yeah. You have to stop buying now. Right. Yeah. And they turn around and say, well, I thought your business is to get as many sales from me. And yes, to a degree it's true. But it's a structured sale, and it is also
But it's not for our benefit, it's for their benefit. Yeah. We're doing it for them, not
But that's the difference being a property strategist.
It's a personal responsibility to get them to the goal.
But you guys have been at this for a couple of decades, right? So you've got the maturity to be able to, you know, and you've probably held your clients' hands through their whole property investment journey.
That's right, and I'm still 25.
Yeah. But there's this period of, like, you know, accumulation and then consolidation, and then what's the last one called?
Yeah. So if you look at it, so there's the planning, right, which goes throughout the process.
Yep.
Then there's the accumulation, and really, if you're looking at it from a decade point of view or the next 20 years, you need to get rid of the accumulation within the first 5 years.
Yeah.
Right. So that then it gives you enough
I'm
time.
still buying property.
I know, but we've changed.
I'm in a new decade.
New decade. Yeah. So you've got the foundational. You've got your this is my backstop.
Yeah.
Now you're now branching out from there. So then you've got your greater 15 years or however time you've got left in terms of working life.
Yeah.
Or the time frame for retirement in inverted commas. That's your time to do debt consolidation or debt retirement.
Yeah.
And the reality is that you might take some debt into retirement, provided it's not going to be at the expense of cash flow.
Yeah.
And all along the way, there'll be mini consolidations, years that we don't buy, years where we come back to properties that we've already got and build on them or implement the full strategy on that property that's in line with the overall strategy, so that we are then moving towards eventual cash flow. Because there's this really simple thing, right? So the cash flow you derive from your portfolio eventually, whether it is through sell down or whether it is through actual rental income, net rental income coming to you, gives you your lifestyle.
Yep.
The equity position gives you the wealth. You really can't spend your wealth. You can only spend the cash flow towards lifestyle.
Yeah. Yeah. Or you got to realise it, and then there's lots of consequences around it with the tax man.
True.
So, and this is, again, it's a hard truth for a lot of successful property investors that if you do this really, really well, you're going to have to give some of your wealth away.
No such thing as a free lunch.
To the Australian government. Like, that's it.
You have to treat it as a business. You're making money. So, and you have to be an active investor. And when people say, I'm an investor, you it's not just about buying properties and sitting on it. You've got to do stuff with it. There's a reason we buy specific properties, because there are different strategies to be implemented on those properties. And that's why we call it the Design Your Decade, because we pick carefully selected properties to give us the results that we are after.
Yeah.
So we're streamlining it as much as possible so we can get to our results sooner, let's say.
Yeah. Again, it all comes back to how you go about it's the execution. You can have the best plan in the world, but if you don't execute on it, it's not worth the paper it's written on, right? So you got to have the gumption and the courage to execute, and I think courage is something which is often overlooked or not spoken about inside of property investment. The best investors I know are courageous.
Yeah, because you're going against the norm.
You have to.
You're going against the trend.
Yeah, you have to.
And then don't look back at the ones that you were scared and didn't take action on, and then say, "Oh, I could have done this." And
could have done.
Look at that.
Could have, would have, should have. And again, that comes with experience. But I think the point you made, Reshmi, was, using professionals to help you on this journey is a sensible thing to do, and you need to be comfortable and confident with your the people that you're choosing, buyer's agent, property strategy, whatever. So you want to make sure you've got the right people who are going to help you execute properly. But me being a cynical journalist, there's a lot more buyer's agents out there today, and pretty much every buyer's agent, and I like your view on this, will tell you that they get the best off-market, undervalued properties, and that seems to be the
flavour.
That's buyer's agents now are positioned as they will get you off-market properties that are under market value, right?
Yeah. Let's define off-market, Victor.
Well, first of all, I call BS. Right?
Okay.
Yeah. The reason why I call BS is this: for a property to be sold, it needs to have a agreement with the agent.
Yeah.
Right. So it is on the market. It's just not on the platforms.
Yeah.
Yeah. If it's not being sold and the vendor was not entertaining, and you actually door knocked and you got that, you're likely paying a premium for them to agree to sell.
If you're door knocking. So you're not like, so in a magic word, knock on a door, hey, do you want to sell your property? Sure, I'll sell it to you under market value.
Yeah.
Okay.
That's it.
Yeah. So it's a pragmatic.
That's right. Or you may occasionally hit the jackpot where you knocked on the door at the right time, right? And they need to sell.
Okay.
In which case, they may not trust you. They'd rather trust an agent because they've got a bigger network, right? So yes, don't get caught up in clever marketing. There is, with very few caveats, there is no such thing as off-market properties.
Okay. What about undervalue?
Value is in the eye of beholder.
Okay.
Right. So I've paid more than the listing price for properties because it had more value for me, because it fitted in better in my portfolio. I may be owning next door. So therefore, I'll pay a premium for this property, and I'll pay over market to capture it, because overall, it's going to give me a far better bang for buck having those two properties side by side, from a development potential or from a zoning potential, right?
Yeah.
Under market values in today's day and age?
No.
Yes, they do exist, but not every transaction. Not every transaction.
And so there's only so many at any given time, really, inverted commas, cracker property deals out there, right? But everyone seems to have them these days, right? So you would come to the assumption that every deal purchased through a buyer's agent is a red hot deal.
That is not the case.
That's not the case.
But that's
There was a time we used to get them.
Yeah.
There was definitely a time, but that doesn't mean it's the same anymore.
Information's changed the way information, and vendors, therefore, with that information, they are a lot more cluey.
Yeah.
Let's keep all the vendors on one side and all the investors on one side.
Investing void, yeah. You do get red hot deals, yes, because of the agent network, because someone may be highly motivated. We've got a few of those each month. Yeah. But it's not every purchase.
It's not the norm.
No,
it's not the norm. So, and if there's more buyer's agents out there, the likelihood of every buyer's agent finding it, so it's like a,
Well, it's interesting. You said more buyer's agents. It just reminded me of the areas when we go looking into buying properties. Then a few months after, there's a lot more activity from other buyer's agents in the area, and it's like, okay, so if all the other buyer's agents are in the area, would the property price will be now still the same, or it'll be a bit of a bit between?
There's a sort of an argument saying that the Perth market's been overcooked by buyer's agents.
I do tend to agree. Like, there's an element of it, yes. And people were paying overs to get into that market because they're trying to catch that growth phase.
Yeah.
But most people entered the market way too late. Right? If you go back to our earlier podcast, we're talking about researching Perth and all that.
Well, I think you guys, just as COVID hit 5 years ago,
you almost locked out of
Perth. Like, you guys were out there hanging around shopping centres, getting I remember having a chat with you guys, getting a feel for what's on the ground. And back then, you guys were going, I think it's time.
Yep.
It's time.
And we were literally the first, and the agents still call me and say, Vic, you are the first person in here, and you're the first person out here as well, from a timing it, right? Now, you can never time it 100% correct. There's no such thing.
No. But, so the point around designing your decade, and you shape the how you execute that, like if your strategy is, I'm only going to buy off-market undervalued properties, good luck with that.
Yeah.
It's just not the buying of the property, it's a very important aspect of
buying the property. Is just the fulfillment.
It's a fulfillment side.
Yeah.
So this comes back to the planning,
yes,
and the council, and the stress testing, and the positioning, and the posturing, and again, everything sort of acts in parallel. But I would say the common thread of all of this, as you design your decade, is your ability to master property investment financing.
Correct. Absolutely. Yeah. That's the key. That's the gold.
That's the gold. And often overlooked as the secondary consideration. I found this great property I'm going to buy, I better get a mortgage. Yeah. It's the other way around, right?
Yeah. Don't put the cart.
How's your mortgage broking business going?
It's going well.
Yeah. What's it called again? Sorry?
It's Investify.
Investify, that's right. Yeah. You guys cracking along?
Cracking along.
Yeah. Yeah.
Getting people to qualify is getting harder, but hey.
Oh, is it? Yeah. So back to the point around property investment finance,
right,
is it? What, just serviceability still tight?
Serviceability, and then the rates that you would get and the properties and the rents that you would get, there's a big slippage in there, right? So arguably sometimes 3%. And that's a lot to hold if you're buying properties at around 800K.
Yeah.
Yeah. So hence the planning bit. So that we can say, okay, yes, we're planning for that. And this is how we're going to hold on to that extra negative cash flow while we force the growth or wait for the market, depending on your age bracket, which is one of the things we'll talk about in the later podcast. And this is how we're going to create the money to hold on to it. and this is how long we're going to hold on to this property before we do X, Y, and Z to it. So all of that comes in after you've put the finance plan into place.
It's all about financing.
And by finance, that's not the loan that you're getting for the property. There's a lot more around it.
Structure, all the stuff. Yeah. And again, that's probably designing your decade.
Correct.
Is. And you ask any property investor who's been doing it for a long time, like their structure now is probably pretty good.
Mm-hmm.
But if you look under the hood, you'll see bits and bobs where there's legacy stuff in there where the structure doesn't really suit them right now. And again, you're never going to get this right.
No.
You're just never going to get it right. The issue I think we have today, and we spoke about this, Victor, on a podcast prior, was a lot of people now are designing their decade with a really complicated end in mind.
Mm-hmm.
So in many ways, they're accelerating structural changes and structural constructs of their portfolio with the wind behind them and what it might look like. Yep. Whereas I would counsel most people to keep your structure as simple as possible.
As simple as possible.
Most people should buy a couple of investors. It's going to sound very, very boring, but you only need to look at the ATO stats and say this is the norm. A couple of investment properties in a personal name.
Mm-hmm. Yeah.
That's what structure probably looks like for most
for most, right? Because lending.
I would say most is a caveat.
Yeah. The lending's easier, and of course, there's some tax considerations if you're selling down and all that sort of stuff. But just don't make it too complicated, because then you're making finance complicated, which is the fuel for your investment.
Yeah, and the more complicated your finance is, the slower you move.
Correct.
I've got 2 points to make. The structure, people doing it too early in the piece, structuring things out because they've got information, and so they're thinking that's the right way to go about it. So it's not sitting right in, like doing it right in the beginning. And the other thing is with the too much information, not taking the action or self-sabotage, because they have all these questions. They want to get everything right, all the good pieces and the gems out of the property investing arena, and say, I want that in this property. Yeah. And so that doesn't happen. So there's the self-sabotage.
Yeah. Self-sabotage is a really good concept, because it happens. And I would make an argument. It's a very general argument, but a lot of self-sabotage will be prompted through social media consumption.
Absolutely, it is. Yeah, absolutely.
Topical, but true.
People are showing that this is possible, that is possible, right? All the rest, the jewels that they're showing, and then someone comes along and says, "That's what I want." You're not going to get that, and so
And another observation, your view on this, Victor, is, and again, it's most people are consuming their information through social media now. If you do that, you would think the way to get ahead in life, and let's talk about in property, is through shortcuts. Everything now is, I've got to hack this, hack that.
Yeah.
You don't have to do the work anymore because, hey, do this 20-day AI challenge and you'll be the smartest person in the room and machines will live your life, and it means you've got more time to do whatever you want. There's no shortcuts in property investment. No. And again, people are going to go, oh, that sounds really boring. That's not what I'm sold. But there's no shortcuts in property investment.
Just remember, the big bad wolf is waiting for you in the shortcut. Yeah. So talking about AI and how it's going to allow things to do. Just understand that AI is akin to, say, you've got a bicycle right now, and AI is the e-bike, right? It gets you there faster through some aspects of life, but it does not replace you. It does not replace the grunt work.
Well, let's talk about it as an analogy. A bicycle versus an e-bike. E-bike's going to hurt you a lot more if you fall off it because you're probably going faster.
Yep. Or the battery may explode on charging.
It might explode on charge, or the battery might run out along the way and they've got no way to get where you want to get. You become not as fit because you become reliant on other things to help you out. So when you actually need that fitness, and fitness in property is the discipline to stay the course, irrespective of the challenge you have. That's mindset. Your fitness is your
Nothing
mindset.
is as good as you, the person yourself, who is in control of your own.
And it comes back to designing your decade.
That's right.
And I'm looking forward to this. So we've got 6 months ahead of us.
Yes.
So we'll telegraph moving forward what the next episode will be.
Absolutely.
As we kick off Design Your Decade.
But pretty much in the next podcast, we'll be looking at how does year one shape out? What are the moving parts? What are the constructs we use? What are the pitfalls? And for those that are listening right now, if you would like a bit more context and a bit more content around Design Your Decade without Phil's input, because he kept interrupting, you go back to episode 45. That was back in June 2020. The concepts that we talked about back then, when we've talked about the same thing today as well, they're very relevant. So we'll put that in the show notes so that you can click on that and go back to episode 45,
June 2020.
Yes.
I look forward to this because it's a nice way for me to I'll use this as my own 6 months of pathway planning for getting my next decade sorted out.
So that's pressure.
And I'd like people to, who are watching on YouTube, to put in comments to say where you are. If you're a beginner investor, where are you sitting and what are your problems that you're facing and where you would like guidance so we can help you get yourself ready so that you can start investing. It's not all about buying a property. The legwork that you do beforehand is very important. So, put comments in the YouTube section and we'll see how we can help you.
And then equally important, if you've got already got a portfolio and you sort of think, okay, geez, I've just bumbled my way through this and I really need to sit down with someone and design it. There is a service where we do a portfolio review. And if you're an existing client, just book in a review.
We still do it, don't we?
We still do it.
Yeah. We're probably due a go.
Yeah. I sit down with clients and map out the next 18, 24 months and also go back to them and say, look, you need to do X, Y, and Z to the existing property. So there is a lot of work that goes in between.
And again, back to the execution side of things, I'll conclude with this point. A lot of the execution stuff is boring and tedious and time-consuming, and you don't necessarily see the value of it immediately. But to your point, Reshmi, it's about putting these building blocks down. It's when you put the building blocks down, you do it in a diligent fashion that you get to a point and go, everything seems to be working well. It's because you did the work at the front end. It's always the way. And the work at the front end, and you can use any sporting analogy, the training is normally the bad bit. It's the bit you don't enjoy, but it gives you the outcomes. But on your
journey, you need that mentorship, that guidance, and that's the portfolio review that we do. That's the guidance that we provide. It's a service that we provide, and we provide it to our clients for free. Obviously, for someone who is not a client and has got a couple of properties in their portfolio, yes, we can guide them too. However, there is a cost to that.
So you guys can, inverted commas, fix portfolios that may have lost their way a little bit.
We do.
Yeah.
We do.
Yeah. Probably what you enjoy doing the most.
That's right.
Yeah, I can tell.
Yeah.
All right. Well, Reshmi and Victor Kumar, thanks for coming in. Directors at Right Property Group. This is Property Investing Insights. This will be fun.
It will be.
A little special mini-series on Design Your Decade. And I enjoy chatting about that and sort of your point around design. Make sure you have fun with this. Don't be scared of this process. It should be a fun process. Remember, questions at rightpropertygroup.com. Send them through there. Anything you want to know as we sort of shape this mini-series out, let us know. We'll design it in a way in which we can be pragmatic as well. If our listeners or viewers want us to concentrate on particular things, we can do that. And we'll encourage you to get in touch and let us know. Rightpropertygroup.com.au is the website where you guys are. Yep. Okay. I haven't visited them. I'll go and check it out. Been there for
Still
a
the same.
while. Still the same. Okay. Thanks for tuning in, everyone. Thanks for your time, guys. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.